Greetings and welcome to Cyber Focus, your source for international business information. My name is Jimmy Bettcher, and our guest today is Tassos Economou. Considered by many to be the Greek Mark Cuban, Tassos is an Oxford graduate and the co-founder of Infinity Finance, an investment advisory company based in Greece, which acts as the sub-advisor of two investment funds. He joins us today to discuss the current European currency crisis and how he has turned these eurozone problems into business opportunities. Tassos, welcome. First off, could you share a little bit of context on what's going on in Europe right now? What have been some of the root causes of the problems that are going on right now?
Jimmy, first of all, it's a pleasure to be here with you. I guess what is happening here in Europe is a case of a union coming together and the problems of taking individual states and getting them to start thinking as a union. So we have a common market, which is a great first step.
Sure.
But unfortunately, that market is not as unified as it should be. So for instance, you have individual bond sales, individual governments, pretty much like your states, but you really do not have an overall federal budget, a federal government to deal with crisis.
Great. And how is this this broad, situation of trying to build a union, but having varied interests amongst the different countries and whatnot, and it's causing all these, currency crises and whatnot. How is that directly impacting Greece right now? Obviously, Greece is very much in the news even today with passing the austerity package.
Correct.
But how has it impacted Greece both in terms of financially as well as socially?
I would primarily say that what we have here today is more of a political crisis, which is what makes it so difficult. Because typically a financial crisis, once you identify the root causes, you have actions to it, and it's easier to do. The reason I guess Greece is suffering more is definitely to do with the unhealthy past, large deficits, primary budget deficits, and the propensity to over-leverage. Greece took that to extremes, and I think it's leading the way to where Germany, France, even the US are going. So you have to address your deficits. You basically have to spend no more than what you're earning, because you cannot borrow in perpetuity. So it's affecting Greece a lot because they have to realize that the unlimited funding is stopping. And it's very brutal for people, and I need to be honest, when you've gotten accustomed to living, I don't know, with a salary, call it of $2,500 a month, when somebody comes back and says, you know what, actually, we can only afford to pay you $1,000, it is a big shock. Problem being that this process should have been a 20-year process, but now it has been forced down people over a period of 2 years. So it is brutal.
Yeah, certainly. Well, and so in terms of, narrowing it down from a bit from the macro perspective to more an entrepreneur's perspective, and getting into some of your experiences, how do you view this crisis as an opportunity, especially for an entrepreneur?
I guess that's why it's beautiful being an entrepreneur, because when everything is black, you really have to find the opportunity, and there's ample opportunity. First of all, what we're seeing is that the mentality of people is really changing. So ultimately, right now, you can actually find a group of very educated people eager to work, and the pay has been readjusted to levels whereby they're now becoming a lot more productive. That is the one thing. The second thing is you had Byzantine bureaucracy in the past. That has to be addressed. You had a lot of unionization and closed professions. That is opening up. So competition is coming. And the beauty is the old way of doing things is no longer the norm. Therefore, anybody thinking with yesteryear mentality is bound to be driven out of business. Now, examples are many. For instance, one thing we noticed, and a great advantage that Greece has, was tourism. Basically, with all this crisis, prices have come down. So our tourism increased even amidst this crisis by more than 20% last year, and we're expecting another 25% this year. So there's a golden opportunity there, which, for unfortunate effects beyond our control, the Arab Spring, the whole Middle Eastern uncertainty, Syria, I'm sure you've seen in the news, has basically created an opportunity for a sector that is booming, and you can actually focus in there and grab opportunities even within the crisis, which means your earning capacity is high, but your cost level is going down. So be that in aviation, in hotels, in packages, this is an area that is really booming and growing.
Now it seems, certainly there's opportunities, but from an investor's perspective, it seems like it might be a very risky time to put in money. Have you seen that it's difficult to raise capital to kind of seize one of these opportunities right now?
Well, I'll say the following. Capital is next to impossible for new people to find right now, but this is where you start thinking outside the box. There's other ways of doing it. For instance, it's very hard to get new capital, but because the banks are willing to get debt out of their books, they're willing to give you existing businesses if you can prove to them that you can run them more efficiently. Right. So there are ways to access capital. It is difficult, but that's why you're getting this valuation. That is definitely something to pay attention to. And that is an area where I think you have to be hands-on, so I would not advise investors remote control investing. It hasn't worked for me, I'll say that bluntly. You have to be hands-on, and yes, there's a lot of risk and there's a lot of return, but I would advise people, unless they know what they're doing and they're willing to commit a lot of energy, don't just invest because it's cheap. There is a reason why it is cheap.
Sure. Moving back to a little bit more broadly in Europe, what do you think is going to happen? Do you think Germany is going to be willing to step in and kind of help out some of the more debt-ridden countries, or?
Well, let me put it this way. If you look back, and it's very important when you're looking at Europe to go back perhaps 20 years to the Maastricht Treaty, Germany has been one of the single most important beneficiaries of Europe. Why? Well, Germany, let's face it, up until about 2 years ago, was the single largest exporting nation in the world, largest than the US. What the eurozone did to them is it created a huge economy. It created a market of, in the beginning, 300 million, now 500 million people for them to be able to invest in and export their products. And this turmoil and crisis has basically decreased the euro-dollar exchange from 160 almost down to 130. So immediately German products are a lot more competitive. Mm-hmm. So Germany is very clear in their minds that the euro as a currency and the euro market is very important to them. B, Germany has a history and it has proven that it understands the concept of financial transfers. The German unification cost them $2 trillion. So they know that there is a pain, but they can see the advantage. What they are rightly saying, though, is we will help, we are there to help, we can see the benefits, but there can be no free meals. I.e., you two have got to get your house in order, meaning to say, I will help you, I will bail you out, but in the future, we need to set that in a solid path, which I think is the way ahead.
Great. Now, obviously, Greece isn't the only one facing this kind of a situation, but do you think that the most recently passed austerity package in Greece is going to be enough to, let's say, access that money that Germany may be putting in and some of the other, more Nordic or some Northern European countries
It is definitely a first step. Whether it's going to be enough, nobody knows. Okay. If you would like my personal guess, no, it won't be enough. The reason why it won't be enough is because it is virgin territory. It has never been done before. So far, anything the IMF or Europe or the ECB has said didn't necessarily work as planned. So you always need to twist along the way. But it's definitely a step in the right direction. Basically, what it is saying is really very simple. You have to get paid based on your productivity, and you have to ensure that the country's financials are such whereby your tax income or what you're earning is enough to cover your expenses. Now, this will be an ever-evolving process as growth goes up, hopefully in a couple of years, and there will need to be readjustment. But taxation on its own is not enough. I agree with people saying, the Greeks have to pay, yes, but at the same time there has to be growth for this whole thing to be sustainable.
Certainly. Now, today we certainly live in a very globalized economy, and what's happening in Europe is going to have large impacts throughout the entire world. Obviously, most of our viewers are Americans, and I was wondering what your thoughts on how the European crisis and potential resolution may be impacting America and its economy.
Well, I'll split the answer in I guess, two pillars. The one is how it's affecting the US today and investment-wise and economy-wise. And the other thing, which I think is even more important, is lessons to be learned and things to be avoided. There's a saying I love, which is that clever people learn from their mistakes, but wise people learn from the mistakes of others. So let me start with the first part, which is how it's affecting the US today. Well, obviously it's affecting the US a lot because Now in the world you have really three major trading blocks. You have China, the US, and Europe. Obviously, when there's slowdown in more than one of these markets, exports go down, international trade goes down. But more importantly in this case, because you have a sovereign crisis which is affecting government bonds, which is affecting the banking sector, you really have a lack of liquidity. Mm-hmm. You're seeing that in areas such as shipping, trade finance, and so on. Therefore, I think it is affecting the US by virtue of the overall international banking sector suffering. It is affecting the US simple investors if they were invested, for instance, in hedge funds or mutual funds that were investing globally, so they're being hurt. And I think like any intertwined economy, you get that. Now, the second part is things to avoid. And I think what Europe is showing is the unsustainability of living on basically more than you earn.
Sure.
We're seeing that the US still today has got a government deficit of about 10%. That is unsustainable. So you have your original debt to GDP at 100%, growing at 10% a year. Clearly, at some stage, this will be unsustainable. The advantage that the Americans have, and they should make use of it, is there's time. So that can be resolved easily with growth, and that's the way forward.
Great. Do you have any advice for any individual American investors that might want to seek opportunities, especially in the European crisis, as you have done?
Well, yes, it really depends on the sophistication. So I would suggest for the little investor, first of all, don't just listen to rumors
Sure.
and ideas and the next hot thing.
Yeah.
And it applies to the US, it applies in Europe. I would suggest that, in my mind, investing is very simple. If it's too complex for you to get it, don't invest in it. And that goes in all levels. Now, do I think there's opportunity in Europe? Absolutely. I think that valuations of companies have been hurt. The advantage is not only in the south, but even in places like France and Germany that have got a much more stable regulatory environment. I think there's opportunity, but I'm adamant and convinced that to take advantage of these opportunities, you have to be really hands-on. You have to be there, you have to go, you have to explore, you have to understand.
Great. Well, unfortunately, we're out of time for today. We certainly appreciate your insights and hope you
It was a
enjoy
real
it.
pleasure, and as I said, I hope that in future discussions, time will be much better.
Yeah, for sure. And we hope that you certainly enjoy the rest of your time here in Bloomington as well.
Thank you so much.
Great.
Real pleasure.
Great. Thank you for tuning in. If you have topics that you'd like to discuss in a future episode of Cyber Focus, please contact the Center for International Business Education and Research here at the Kelley School. Thanks.